Hello guys, today I'll be discussing 4 companies, but before I start discussing them, I would like to show you an application which is currently available on the App Store. The application is called Guru Finance. It is an application which you can use to analyze a company of your choice. Here you have a short introduction. Here you put in the values of the company, their statement of operations, their balance sheet, and you name the company. Afterwards, you get this kind of analysis. As you can see, there's a demonstration in the App Store of a company called A. Afterwards, you can create a market out of the companies you select, and you can then compare the companies separately to each other. You can compare them to a market of your choice, and you also have a library where you can see all the companies you have analyzed with this application and a list of markets you have created. In any case, in the next video I will show you how to use this application. It will be a short demonstration, but hopefully you'll get the hang of it. In any case, in this video I will be discussing 4 banks. I'm going to analyze 4 banks, 4 American banks. The first one will be Bank of America, the second one is Citigroup, third one is JPM, and finally there is Wells Fargo. Bank of America bet its estimated earnings in the third quarter and fourth quarter of last year. They bet their first and second quarterly earning this year, and their share price was at 24 at the beginning of the pandemic, and it reached a peak of 47.78. Citigroup bet its quarterly earnings in the third quarter and fourth quarter of last year, and they bet their first and second quarterly earnings for this year. At the beginning of the pandemic, they were at 51 and they reached a peak of 78. JPM bet its third, fourth quarterly earnings for last year, and they bet their first and second quarterly earnings for this year. The share price at the beginning of the pandemic was at 94 and it reached a peak of 169. Wells Fargo missed their third and fourth quarterly earnings. However, they did beat their first and second quarterly earnings for this year. And as you can see, the estimate for their third quarterly earning this year is higher than the estimate for their third quarterly earning from last year. In terms of the share price, the company at the beginning of the pandemic was at 25 and it reached a peak of 53.8. Let us now move on to their respective financial statements. The first company I'd like to discuss is Bank of America. The company's total revenue rose from 85,528 in 2020 to 94,950,000. The company's expenses during this time rose from 55,000 to 61,000. And finally, their net income rose from 17,894 to 27,528. This is good news to investors, the fact that revenue and income rose. Bear in mind this is in millions. The next statement I'd like to look at is the cash flow statement. The company's operating activities fell from 37,993 to 6,327. The company's investing activities fell from negative 177,000 to negative 2,529. And finally, their financing activities fell from 355,000 to negative 106,000. Now, the main reason these changes happened in their cash flow is due to the sale of derivatives and the sale of cash and cash equivalents. We will see these changes in their balance sheet. As we can see, their cash and cash equivalents fell from 348,000 to 230,000. Their debt securities fell from 962,000 to 862,000. And finally, total assets fell from 3,169,000 to 3,051,000. Their total deposits, short-term liabilities, fell from 2 million to 1,930,000. Bear in mind, a large portion of these total deposits are payables, so there's nothing to be concerned about. Their total liabilities went from 2,899,000 to 2,778,000. And finally, their total equity went from 270,000 to 273,000. Overall, Banks of America financial statement is good. They have a good ratio between revenue, between income and equity, and between their assets and current liabilities. The company has a good value. They do have a strong financial condition and they have potential to grow. Let us now move on to the next company. The next company I'd like to discuss is Citigroup. Citigroup's total revenue fell from 75,501 to 75,338. Their total operating expenses rose from 44,374 to 51,292. And their net income rose from 11,000 to 14,845. The fall in revenue is not significant, but hopefully the company will manage to increase it in the near future. Hopefully they will decrease their operating expenses, and hopefully they will increase their net income. Their net income was at 21,952 in 2021, and hopefully they'll manage to rise it back to that number. The next statement I'd like to talk about is their statement of cash flow. The company's continuous operations rose from negative 23,000 to a positive 25,000. Their investing activities fell from negative 92,000 to negative 79,000. And finally, their financing activities fell from 233,000 to 137,000. The change in operating activities was mainly due to the change in goodwill and investments in debt and equity securities. On the other hand, the change in financing activities was mainly due the change in financing activities was mainly due to the change in deposits from 210,000 to 68,415. Let's now move on to the balance sheet. As we can see, the company's deposits rose from 311,000 to 234,000. They also increased their total investments from 512,000 to 426,000. Their loans fell from 451,000 to 640,000. And their total assets moved from 2,291,000 to 2,416,000. The company's total liabilities rose from 2 million to 2,214,000. And finally, their equity fell from 202,000 to 201,000. Overall, the company's financial statement is in a similar condition as Bank of America. They have good revenue and income. They have a good financial condition, value, and they do have potential to grow. But it is a bit suspicious that their financial statement is so similar to the Bank of America. Moving on, let us now talk about the third bank, JP Morgan. JP Morgan's total revenue went up from 119,951 to 128,695. The company's net income went from 29,000 to 37,676. All of this is good news to us as investors. Hopefully the company manages to bring back the income to 48,334. Go on to the company's statement of cash flows. Their operating activities rose from negative 79,000 to a positive 107,000. This increase was mainly caused by the reduction in trading assets and in the change in accounts payable and other liabilities. There was a change in investing activities. It went from negative 261,000 to negative 137,000. The main reason for this change is the reduction in purchases. Purchases went from negative 397,000 to negative 126,000. Finally, their financing activities went from positive 596,000 to a negative 126,000. This change was caused primarily due to the change in deposits. The company's deposits were changed from 602,000 to a negative 136,000. Let's now move on to their balance sheet. We can see that the company's deposits in banks fell from 714,000 to 539,000. Just like in the financial statement, they also experienced a decrease in loans from 1,077,000 to 1,135,000. And their total assets went from 3,743,000 to 3,665,000. There was no significant movement in total liabilities. Total liabilities went from 3,549,000 to 3,373,000. And finally, their equity went from 294,000 to 292,000. Once again, JP Morgan has a similar financial condition to the last two banks. They have a strong financial condition, a value, and growth. I will talk more about this when I place the banks on the rating table. Now, let us move on to the final bank. The last company I'd like to talk about is Wells Fargo. The company experienced a decrease in revenue from 74,000 to 73,785. They experienced a increase in income from 3,377 to 30,182. That being said, in the previous year it was higher. It was at 21,000. Hopefully the company manages to increase their income and their revenue. Moving on to their statement of cash flow. The company experienced an increase in operating activities from 2,051 to 27,048. The main reason the company experienced this increase is due to the reduction in purchases of loans held for sale. Initially it was at negative 181,000 and it rose to negative 74 and it decreased to negative 74,000. Wells Fargo's investment activities went from positive 122,000 to negative 42,000. The main reason is due to the increase in purchase of loans. Loans went from positive 53,000 to negative 74,000. Finally, their financial activities went from negative 1,243 to negative 59,645. This change was mainly due to the change in deposits. Let's now talk about the company's balance sheet. Wells Fargo's cash and cash equivalents fell from 234,000 to 159,000. The company's net loans went from 882,000 to 942,000. This coincides with their increase in purchase of deposits. Their total assets went from 1,948,000 to 1,881,000. Liabilities went from 1,757,000 to 1,699,000. And finally, their equity went from 190,000 to 181,000. The company's ratio between current assets and liabilities is good. They have a good financial statement, a strong balance sheet, and a good value. Let's now rate all four companies and discuss their balance sheets a bit more. Now, before we place the companies on the rating table, I would like to discuss their financial statements. All four companies function in the same market, and yet they have very similar financial statements to each other, which is suspicious to me. It's strange to see four large companies from the same market which compete against each other to have such similar financial statements. Before we place the four banks on the rating table, I would like to talk about their financial statements. All four of the companies are large American companies. They compete in the same market, and therefore each one of them competes against one another. And yet, according to my analysis, they have a very similar financial statement in its entirety. This is very peculiar to me. No other industry has companies with such similar financial statements, such big companies which compete in the same market. And as a result of this, I question the profitability of these banks to shareholders. I don't understand how four large companies could have such a similar financial statement It's possible that they have a lot of government control. It's possible. It's possible that there is too much government control in the industry. And if there's too much government control, then the government could potentially limit the benefits the shareholders earn by investing in these banks. They could limit the shareholder profitability, and that's something that I am concerned with. Perhaps a shareholder might profit from these banks if they buy them at a lower share price. However, it's highly likely that the profit will be limited and small. It's also possible that the banks are too dependent on the central bank, and that again would limit the profitability for shareholders. It's also possible that the banks are too dependent on politicians and again are overregulated. And if that is the case, then shareholder profitability, the profitability of these companies to shareholders should be questioned. At the end of the day, companies of such scale should have different financial statements from each other, and yet all four companies need to do the same thing in order to improve their financial statement. It doesn't make sense to me that none of them are better than the other in any way, shape or form. In any case, although I do think that the profitability for shareholders should be questioned, I do think that each one of them has a good financial statement and they are in a stable position. For that reason, I am going to place all four of them in the OK section. They are safe companies, but whether they are profitable companies, profitable to their shareholders, is something that should be questioned. In any case, that is all I have to say about these banks. In the next video, I will be talking about home construction companies. Each one of them operates in America, and I will be using Guru Finance in the next video to demonstrate how to use it. In any case, hopefully you liked the video. If you did, give it a like and subscribe, and see you next time.